The looting of the National Heritage Life Insurance Company of $450 million was one of the biggest white-collar crimes ever. The thieves were a gang of professionals, not professional thieves, but accountants, lawyers, and businessmen who bought National Heritage back in 1990 and turned it into their own private piggy bank. The scam involved a prominent New York law firm, the Mafia, a strip club, and a flamboyant Hasidic Jew who was one of the investors in the famous New York disco Studio 54. They were so good at hiding their crimes that it took authorities 4 years to finally catch on, and another 5 years to sort it all out. This is all that's left of the National Heritage Life Insurance Company. Box upon box of records and a handful of auditors and former employees going through them in a small, nondescript office suite on the outskirts of Orlando, Florida. They're trying to reconstruct an elaborate trail of mortgage and real estate fraud, forgery, and money laundering that might have succeeded if it weren't for the persistence of FBI agent Joe Judge and federal prosecutor Judy Hunt.
When Joe first brought the case to me, it was presented to me as a $12 million case involving probably one, maybe two defendants.
We thought we could wrap the case up in a year.
It didn't end up being a $12 million fraud.
No, it ended up being closer to a $500 million fraud.
It began September 7, 1990, the day the insurance company was bought by a group of investors that included David Davies, an Orlando accountant, and Patrick Smythe, an Arizona businessman. They were represented in the transaction by New York attorney Michael Blutrick.
They paid $4 million for a controlling share in the insurance company. Unfortunately for the entire insurance company, that was a $4 million hot check. The check was virtually worthless.
Virtually worthless?
They had a few $1,000s in the bank, but it was a $4 million hot check that they bought the insurance company with.
How does someone buy an insurance company with a hot check? Well, in retrospect, it was pretty easy. The buyer simply stalled the closing till late on a Friday afternoon after the banks had closed, knowing that their check couldn't be processed until the following Monday. Then over the weekend, the new owners got together and with access to the insurance company's treasury, transferred enough money into their account to cover the kited check.
The money was transferred around and the check cleared.
So they stole it from the insurance company to buy the insurance
That's
company.
right.
Nobody had any doubts about these guys? Nobody bothered to check them out beforehand to find out if they had any money?
There was a $4 million check on a prominent New York lawyer's trust account, Michael Blutrick. It had all the trappings of legitimacy.
All of the people involved in National Heritage were community icons. These were very successful attorneys and businessmen across the board.
David Davies was a pillar of the Episcopal Church in Orlando, and the company's lawyer, Michael Blutrick, was a partner in a politically connected Park Avenue law firm that prior to the fraud had included U.S. Secretary of Housing Andrew Cuomo. In fact, his father, former New York Governor Mario Cuomo, had helped some of his closest political aides start the firm. Roger Needham was an insurance investigator with the state of Delaware, where National Heritage was registered.
I saw a newspaper article where Mario Cuomo stated that when he retired from politics, he most likely would join Blutrick and his law firm. I mean, those are pretty savvy guys, and they were probably misled more than I was.
The next thing the new owners did after getting control of the company was to begin an aggressive campaign to sell annuities, insurance policies that accumulate interest and are used to fund retirement. National Heritage raised the interest rates on these annuities to 9.5%, at the time one of the highest rates in the country. Retired engineer Joseph Bossman was one of 28,000 people who bought the retirement policies and, based on the advice of his financial planner, invested several $100,000, most of his life savings. They were paying a good interest rate.
At the time, they were paying a very, very good interest rate, yes. And we felt very good. I got the quarterly statements and found, you know, that the money was building up very nicely.
Do you think it was a safe investment?
Yes.
In the space of just a few years, the company's assets soared from $45 million to $450 million.
The money was pouring into this company in rivers. And of course, they had to invest all that money. And they invested it, but they stole it as they invested it.
Like most legitimate insurance companies, National Heritage appeared to be investing its policyholders' money in stocks and bonds and real estate. What set this company apart was that the people in charge were embezzling the money as they invested it, draining the company coffers through a series of increasingly audacious frauds. They pretended to make loans to legitimate borrowers when in fact they were actually loaning the money to themselves through phony front companies with no intention of ever paying it back. They borrowed $5 million from National Heritage to buy this land in upstate New York, but they only paid $1 million for it and pocketed the rest. The same thing with this amusement center in the Catskills. It was on the books at $4 million, but really worth less than 1/10 of that.
And any investment they dealt in, they always skimmed millions out of it and then pumped up some phony asset so that it looked good and hopefully would pass the regulators.
I mean, it sounds like they didn't expect to get caught.
Never. Never. It was too complicated, too convoluted, too sophisticated, too many people involved, too many trails. They never dreamed anyone would figure this out.
On paper, the insurance company's investments appeared to be legitimate. The policyholders' money, safe and secure. And for a number of years, that was good enough to fool independent auditors and Delaware insurance investigator Roger Needham.
Every time we would question something, they would produce documents to back up what they were doing.
The problem was the documents were forgeries. When they drained $35 million in cash from National Heritage, they produced these account statements showing that the missing money was invested in government mortgage bonds.
This is pretty good forgery. Pretty good. This would pass muster with me, and I'm a good auditor.
You don't think you would have caught this?
No, not at all. Not at all.
As it turned out, one of the few functioning investments National Heritage Life Insurance made was to fund the startup of a legendary Manhattan strip club called Scores, which became a hot spot for Wall Street stockbrokers and the setting for this Playboy video called The Girls of Scores, which listed Michael Blutrick and another National Heritage insider, Lyle Pfeffer, in the credits.
Probably not the most prudent loan for an insurance company, but prudence was not the rule at this insurance company.
The club became so successful that National Heritage soon found itself with a brand new set of partners, namely members of the Gambino crime family, under its new boss, John Gotti Jr.
They paid willing kickbacks to the Gambino crime family so that Scores ran smoothly. There were never any labor problems at Scores, delivery problems, parking problems, never any problems. Gambino crime family assured them of that.
But the Gambino crime family brought a different set of problems, namely close scrutiny by the FBI, which wanted to make a racketeering case against John Gotti Jr. And before long, the feds raided the New York strip club. Richard Herman was one of Michael Blutrick's law partners. He says Blutrick became so worried that the firm was being bugged, he called in an electronics expert to sweep the office.
And he began to pop out some ceiling tiles, and he started with the one right above Michael Blutrick's desk. And when the tile was popped out, an audio plug dropped.
A microphone.
A microphone. Well, mini mic popped out of the ceiling and hung down right above Michael Blutrick's desk. And then in the corner of the office, a video camera was placed in the wall. And no one knew how long this was going on for. And Michael turned white as a ghost and realized at that point they got him.
Anywhere from $50,000 to $70,000.
While the FBI had been recording Michael Blutrick's conversations with members of the Gambino crime family, Delaware insurance investigator Roger Needham had been driving around the Northeast eyeballing some of the insurance company's investments. And it didn't take him long to get the picture. This abandoned warehouse in Brooklyn was on the books at $8 million and supposedly producing a steady stream of rental income for National Heritage policyholders.
What was this supposed to be?
This was supposed to be yeshiva.
A religious school?
That's right.
What's going through your mind?
This is a fraud. I mean, no yeshiva.
The insurance commissioner of Delaware took over the insurance company, and they began then to examine the books and records, and it was very quickly that we were informed that they couldn't determine if the insurance company had any assets at all.
Every asset was suspect, and we started looking at every major financial transaction that insurance company entered into, and most of them turned out to be fraudulent.
So what you had was a $500 million shell?
Virtually a $500 million shell.
As it turns out, one of the biggest frauds perpetrated against the policyholders of National Heritage Life wasn't even carried out by Michael Blutrick, Lyle Pfeffer, and their band of crooks. It was carried out against them by an eccentric Orthodox Jew by the name of Sholem Weiss, who had once been an investor in the New York disco Studio 54 and was widely respected in New York's Hasidic community.
You have to understand, Blutrick and Pfeffer in this case were a crime wave. Sholem Weiss was a crime tsunami.
It seems like whenever somebody enters the picture, they're more predatory than the person that preceded them.
It kept
That's what we
growing and
found.
growing.
How do these people find each other?
We think there's some kind of conman.com.
Weiss was given $100 million to go out and buy up income-producing mortgages that the insurance company could then inflate and put on the books at $135 million. Instead, Weiss spent only $65 million on mostly worthless, non-performing loans and wired the rest to his bank accounts in Israel and Switzerland.
Did they expect that Weiss was going to do this?
Steal that money? I don't think so. No. Well, I mean,
They knew
they
he
always
was a
do. You
crook.
steal some, you know, a couple of million. You kind of expect that among this crew, but not the $20 to $30 million that Sholem Weiss took.
Michael Blutrick agreed to cooperate and entered the Witness Protection Program in exchange for his cooperation in making a case against John Gotti Jr. and the members of the Gambino crime family involved in scores. He also provided evidence against Sholem Weiss, who was indicted on charges of racketeering, money laundering, and fraud.
This is the Weiss file room.
Weiss was represented in a 10-month trial by Miami attorney Joel Hirschhorn, at least until near the end of the trial, when Weiss went home to spend a long weekend with his family in New York State. He was due back in court in Florida with the other defendants the following Monday morning at 9 a.m.
I realized that 10 to 9, when everybody else was there and he wasn't showing up.
And you didn't think that he was
Delayed
held up in
traffic?
traffic?
No, I did not think he was delayed in traffic.
Were you angry?
I was professionally embarrassed. I was sitting next to an empty chair. There was no one next to me. And you could see the jury pan the courtroom, and they check everybody, and there I was without a client.
The jury apparently took Mr. Weiss's absence as a sign of his guilt. He was convicted and sentenced in absentia to 845 years in prison.
And I'm told it's the longest sentence in the history of the Republic.
845
He
years.
could do that standing on his head.
What about Mr. Weiss? Where is Mr. Weiss?
Where is Mr. Weiss, Jeff?
I think we've narrowed it to Europe, Asia, and South America.
Eliminating.
Eliminating virtually nowhere.
What happened to all the money? Where is all the money?
We don't know where all the money is.
It's possible he's dyed his hair blonde and is wearing a Hawaiian shirt and Bermuda shorts at this point. That wouldn't surprise us. There's no reason to think he would necessarily adhere to either the customs or dress of his religion.
We are looking for Mr. Weiss. Mr. Weiss is somewhere in the world, and Mr. Weiss, look over your shoulder right now. We are coming. We will see you soon, Shalom. Shalom.
As it turns out, the FBI kept its promise. Weiss was greeted by federal agents in Vienna 12 days ago, flush with cash, 40 pounds lighter, and with a 27-year-old Brazilian girlfriend. He will join Michael Blutrick and 11 other co-conspirators in federal prison as soon as he's extradited. Blutrick's law partner, Richard Herman, was the only one acquitted. As for the 28,000 National Heritage policyholders, they've gotten most of their money back, thanks to a taxpayer-funded bailout.